Moving Iron Podcast is proud to be part of the Global Ag Network. The network is live, so check out globalagnetwork.com for more details and updates. Now on to the show.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Tax Moves with Glen Birnbaum. Glen, how you doing today?
Good, Casey. I can see you live and in person.
Yeah, it's I got you and Chip both here in the same area, so it was cool to get to actually physically meet you and not just talk to you via internet. So yeah, it worked out pretty well.
Just had a good lunch, so now we're ready to talk.
Now we're ready to talk some tax moves. So while we were eating lunch, the Wall Street Journal put out the Federal Reserve had lowered interest rates by 1/4 point. So in the grand scheme of things, what's that mean for us, Glenn?
Well, from a tax perspective, we've talked about this a few times where, in some cases you can be limited now. You can't necessarily deduct all your interests, first time ever really for, our type of client base, not international companies, just, United States mainstream companies, and I have to worry about interest limitations. And so obviously if the interest rate's lower, have less chance of running up against that limitation. So that's one thing from a tax perspective. But most immediately it's going to be the lines of credit, the people have, they're going to be paying 1/4 point less if it's based on the prime rate. So should be a nice little boost. And it sounds like maybe they're talking about even lowering it further in future months. So
they've kind of hinted around. This time last year we were concerned about additional rate hikes on top of the 2 or 3 they had already done throughout 2018, and now they're kind of reversing that to where they might be doing the exact same thing again, but the opposite direction, doing another 2 or 3 drops of the interest rate 1/4 to 1/2 point at a time. So I don't know. It's kind of one of those things where maybe they're trying to be ahead of the curve a little bit here and talk about not reacting to a recession while the recession is deep and entrenched in what's going on, but maybe it's holding us off a little bit with some stuff there. So it's hard to say.
And I think too, as other countries, international interest rates are so low, or they're pushing zero. It's just the U.S. is kind of the outliers, so maybe trying to get back to a little closer to equilibrium there. But
Okay. So the other thing you had to talk about was some final regulations on interest.
Yeah, so interest expense, they've issued proposed regulations. There was a public hearing in February. We are expecting to get those final rules coming out here in the next few months. But just in the last few days, we've got this OMB, the Office of Management and Budget, that basically has a secondary review on these regulations. So now we know that the bonus depreciation regulations that were proposed last August, I believe, those have been finalized and they're going to OMB, went there a few days ago. So we should see those in hopefully a month or so. And there is some interaction there. I was reading some commentary on this. We talked about this, like the floor plan interest, and there's some special rules that say, okay, if you don't want to be subject to the interest expense limitation rules, because you're a farm equipment dealer, for example, then you won't be able to take bonus depreciation. Now that's kind of the give and take thing. And so these bonus depreciation regulations should get released, and the IRS has mentioned in a few conferences that they're going to address what do we mean by floor plan interest. We had some discussions about it. Farm equipment counts, but construction equipment doesn't, and some of these little nuances, right, about that. So there could be some bits of information about the interest expense regulations and rules in these bonus depreciation rules that are being released. So always something to think about. But as your listeners might remember, one of the unique things is that for the first time ever, we can now bonus depreciate used equipment or used assets, and so that has some challenges about. Well, I think one of the things they're looking at is, well, what if I bought this property, 40 years ago, and I sold it, and then I buy it back? Is it ineligible for bonus? At some point, it does matter. If you just bought it a year ago, you probably can't do something to game the system. But what if you bought it 30 years ago or 20 years ago? what is the definition of used, having never been used it before? Does that mean forever? Or, these are the kind of things that come up. So yeah, hopefully we'll get some guidance on that before September 15th is the deadline for a lot of entity returns. So
yeah,
only a month and a half on that though.
Right. So we talked about MFB payments last week we were on here, and what that looks like and how that stuff works. You have any real clients that are having how bad is that going to affect some of your guys when you start looking at their tax situation with those MFP payments?
I don't think, I think we mentioned last time, the good news is they're supposed to come in August, so, we'll be able to react. Generally speaking, you can, pay a bill or do something to get the income where you need it to be. What we don't like is what happened last year is, all of a sudden they got an unexpected deposit the last day of December. So as long as we're given enough notice, we can probably work around that. But you do need to think about, what am I going to do with that money? That money is taxable. So if you're gonna take the money, it's going to be taxable, and if you use it to just to pay back your line of credit, that's not deductible. So you just have to keep that in mind. You might think, well, I got this $75 an acre payment as an example. I use it to pay off my line of credit. That's not a even switch there, right? You've got income, so you just have to keep that in mind. But I think most farmers that I'm dealing with are obviously. They're not gonna, they're gonna take it. They're not gonna refuse it. It's needed for cash flow. But just keep in mind, if you use it to pay off debt, that's not a deduction. So, you may end up having to borrow it back on the line of credit later to buy a fertilizer or seed input or something. So that's kind of how you get back to even. So.
You'd have to find some kind of an expense, buying chemical seed, whatever, new pickup, something like that.
Yeah. So, but if temporarily you use it just to pay down your debt, right, just to not have to pay as much interest, right, knowing that later on in the year, then we'll probably have to borrow it back. So, Yep.
Right on. Okay. Well, Glen, there's plenty of stuff happening out there. What are some other stuff that on your radar right now?
It's obviously July 31st here, so. We're well into the year, and at this time of year, we can start to, you pretty much, as a farmer, you pretty much know what your expenses are, right? Generally speaking, a lot of your expenses have been covered, and so we can start to do some initial tax planning to say, okay, what's happened? Maybe there's been a fair amount of grain sales because of some of the price increases, right? And so we just kind of want to, maybe our first chance to say, okay, where are we sitting at for 2019? And then, we pretty much know we can control our expenses, for the fall, and okay, here's what we need to do. So we're going to be reaching out to a few people, next week as they can get their books updated. So never too early to start thinking about tax planning and where you're going to be at, and do you need to buy some equipment or do you have needs? So that's part of it. Next quarterly estimate is September 15th for individuals, so that's a little ways away. But you start thinking about what kind of year am I having? Am I having a better year than last year or worse? Because that depends on how much of your estimates we're going to pay. A lot of times we've talked about we're just going to pay our tax estimates assuming we made the same money as last year. That's kind of what you're supposed to do. But if your income is going to be down and you're pretty sure about that now, there probably wouldn't be a reason to go ahead and make those same estimates, right? The third quarter estimate is usually when we start thinking about, well, does it really make sense? We'll make the first and the second quarter estimate just because generally you're going to probably need to do that. But the third and the fourth quarter, we might look at things and say, we don't want to make a payment. We don't need to make a payment, depending on how the year's going. So this is really where we start to kind of change course, the second half of the year.
Yeah.
So.
Yep. All right, Glen. Well, plenty of stuff going on. Folks want to reach out to you, ask you some questions, or get some good old-fashioned tax advice. How to do that?
It's best to call our office here at Heinold Banward, 309-694-4251, or you can always look me up on Twitter at Glen Birnbaum is the handle.
Right on. Well, I would suggest everyone to follow him because he's got plenty of good stuff out there, and then there's plenty of folks that jump in back and forth and have these big accounting tax debates on the Twitterverse out there. So anyway, Glen, it's a pleasure to finally meet you in person, man.
Same here.
And
appreciate it.
Thanks for the hospitality.
Thanks, Casey.
All right, buddy. Thanks for listening to this edition of the Moving Iron Podcast, now part of the Global Ag Network. If you'd like to continue any of these conversations, you can hit me up on Facebook, Twitter, or Instagram at Moving Iron LLC. You can also send me an email at movingironpodcast@movingironpodcast.com. You can also visit the Moving Iron Podcast YouTube channel and watch Market Roundup with Chip Dellinger, Sean Hackett, and Angie Setzer. Also, Tax Moves with Glen Birnbaum. Please visit movingironllc.com. Here you can find information, details, and updates for the 2019 Moving Iron Summit in Nashville, Tennessee. If you'd like to support the podcast, you can leave a review and subscribe at iTunes, Google Play, Stitcher Radio, TuneIn Radio, SoundCloud, and globalagnetwork.com. So until next time, let's go move some iron. This is Casey Seymour. Out.
Moving iron in the 21st century.